Morning, everybody. Morning, morning. Hope everybody is well. So I have quite a few names that I recognise and a couple that I don't. I'm just going to hang on for a few little minutes in case anybody else wants to join live before we get started. And I'm going to attempt to keep an eye on whether there's anyone else waiting, but I'm not very good at doing two things at once, so just bear with me. If you are somebody that I don't already know, feel free to pop in the chat where you're joining me from, and how I can help. My plan for today is that I've got some slides to go through with you. So I'm going to take you through the basics of making tax digital, what on earth it is and how it's going to affect you, indeed whether it's going to affect you. And then I'll do Q&As at the end. If you have a pressing question in the meantime, feel free to use the sticky your hand up emoji, however that works. I do not know, but people seem to get it to work. And I'll try to answer you as we're going along. But I'm doing a screen share, so I don't know what I'll see and what I won't see. Those of you that know me know I'm a bit pants with live technology, but we can but try. This is the way. Okay, so I'm going to turn my screen share on for a start. And if somebody could please give me a little message in the comments to let me know that they can see it, that would be grand. Fab, thanks, Sam. Thank you, Helen. Okay, so let me just move that there. Hopefully I can see if people try to join and everyone can hear okay. And then I will start. Okay. So, making tax digital, what on earth is it? When's it coming? Who's it going to affect? So, making tax digital has been in the pipeline for some time. Originally in 2016 was when they first started implementing it, and they have implemented Making Tax Digital for VAT. So if you are VAT registered, the joyous news is you're already Making Tax Digital compliant, and therefore you won't need to change anything. However, if you're not VAT registered, then, and if you're self-employed, then this will quite possibly affect you. We're going to talk about whether it's going to affect you, what the criteria are, and when it's going to affect you. So those of you that don't already know me, my name is Michelle. I am also known as the Accounticorn, which is an accountant, but far more awesome. And I'm going to take you through what's changing, what you need to do, and how to make it as painless as possible. Careful use of the words as possible there, because I'm not going to pretend that everything is going to be pain-free. I'm just going to tell you how I think you can manage it best. Okay. Oh, my screen won't change. Hang on. Oh, I can't move my slides. Ah, there we go. Fabulous. Right. So on today's agenda, we're going to talk about what Making Tax Digital actually is, what you need to do in order to comply with your Making Tax Digital obligations, and who it affects, when it's going to affect them. And I'm also going to give you a few tips and hints of how you can make it easier for yourself. Okay, so what exactly is Making Tax Digital? So MTD is the abbreviation that you'll hear a lot of people using, and MTD stands for Making Tax Digital. Now, HMRC's take on it will be that it's their plan to modernise the tax system. The skeptical ones amongst us might see it as HMRC's plans to be able to keep more of an eye on you. But hey, it's not me. I'm not a skeptic here. And basically what they're trying to do is ensure that everybody is keeping their records digitally, keeping them up to date more regularly, and making sure that they close some of the gaps of tax that they believe that they're missing. So what they expect is, by keeping everybody digital and up to date, they're going to be able to keep a closer eye on where tax might be going wrong, people making errors. The whole digital thing is to prevent so many human errors. Ultimately, it's going to be really, really good for everyone. And I know that they don't see it like that at the moment. But ultimately, if you are keeping your business information in real time and looking at the numbers more regularly, it is going to help you with your business. Now, it's kind of like that thing where we're being forced into this situation, and plenty of people will resent it, but actually in the long term I can see the greater good, and I can see that this is going to be helpful for business owners. We've just got to get over this hurdle. It's much like anything, you know, like auto enrollment came in and we were pushed into a situation where we had to do this thing, but probably something that we should have done a while ago. They did the same thing with RTI submissions for payroll, pushed this thing in, didn't want it to happen. It's probably for the better in the long term. So I'm not necessarily saying I'm an HMRC fan girl over here, definitely not. But I can see that it is going to work for you in the long term. So I encourage you to embrace the change and work with me, and I'll help you through it. The software requirement for for Making Tax Digital is that your records have to be kept on digital software. Now, digital means anything digital, really. So yes, that could still be your spreadsheets. However, if you use spreadsheets to record everything, you're going to need a piece of bridging software. So the bridging software, excuse me, is going to sit in between your spreadsheet and the thing that you make the submission on. So from my perspective, you would have to argue that you're actually making it more complicated for yourself than it needs to be. You're better off to be putting your information, your source data becoming the software, rather than putting it in a spreadsheet and then working out the software in between and then making the submission at the end, if you see what I mean. You're complicating a situation for the sake of thinking it's going to make it easier for you. So the software requirement is that you must use software to keep digital records and file your returns online. Bear in mind, Excel is software. I'm not saying you can't use Excel, but I'm saying you're probably actually making it harder for yourself than it needs to be. The implementation timeline. Okay, so it's already in place for VAT, and income tax is next. So income tax is payable on your self-employed income and rental income, and on other income, but this is the type of income that's going to be affected by making tax digital in the first instance, and is starting from April 2026. So we're under a year away now, and it's a big change, and I'd very much encourage you to start looking at it now. And so who's going to be affected and when are they going to be affected? So initially, we're looking at sole traders and landlords that are earning over £50,000 annually. Okay, so from April 2026, HMRC are going to expect any sole trader or landlord that's earning over £50,000 annually to be making tax digital compliant. Now, you are responsible for registering yourself. Okay, that £50,000 trigger is based on the last filed tax return. So when you file your 24-25 tax return, you need to have a look at it and decide if your income on that tax return is over 50k. If it's over 50k, then you're first. Lucky you, first in line. HMRC have said they will send out letters. So what is supposed to happen is if you file a tax return and you're a sole trader or a landlord with over 50k annually, and that shows on your 24-25 tax return, then you should get a letter from HMRC saying, we believe that you should be making tax digital compliant, and therefore this is what you need to do. I say should, and I emphasize the word should, because we absolutely must not rely on that letter coming, because HMRC are not very good at letters, and you're responsible. You're expected to identify when you need to register for making tax digital and to become making tax digital compliant. Okay. Then from April 2027, that threshold is going to lower to 30k of annual income. So they are the trigger points that we know about at the moment. Eventually, this is going to roll out to everyone, but these are the ones that they're focused on making happen to start with. So April 2026, it's earning over 50k. So if your 24-25 tax return has been filed with more than 50k on it, then you need to be making tax digital compliant from April 26. And if you're over 30k, then we're talking from April 27. So if you've got a business, a side hustle, or rental income in these brackets, it's relevant to you now. Okay. So what are you going to need to do? You're going to need to keep digital records. So for some people, that's already going to be happening. For other people, they might still be on paper records. They may be on spreadsheets. And as I said before, spreadsheets are very much going to be on their way out, because of the fact that you've still got to get the spreadsheet into a making tax digital compliance software to be able to make the submission. You're not allowed to copy and paste. So part of that is that you're if you use various digital elements, they have to connect directly. So you would have to map the data in your spreadsheet to another piece of software. You can't copy and paste that information. Copying and pasting is not allowed to be if you're looking to be making tax digital compliant. So with spreadsheets, what you're doing is trying to keep your old ways that you're used to and comfortable with. I get that. Oh, bless you. Keep your spreadsheets that you're used to. But then you've got to make it Making Tax Digital compliant. And there is this absolute world of software out there that will do this for you so much easier than trying to work this out. It might feel scary, but actually it's going to be harder to use that bridging software, in my opinion, than to use the software in the first place, because you've got to get it into the software to make a submission. You need to make sure whatever software you're using for the submissions are HMRC approved. So examples of that would be the market leaders by far, Xero, FreeAgent and QuickBooks, but there are going to be hundreds of possibilities, I would imagine. Now, I don't know yet if this is live, but what I imagine will happen will be the same as what happened with RTI, so that's for payroll. And basically HMRC publish a list of every piece of software that they approve for Making Tax Digital. So if there's a piece of software that you're using that you do not know whether it's Making Tax Digital compliant, then there will likely be a list on HMRC's website. Realistically, you're probably better off with one of the market leaders. They're developing quicker, they probably work better. In my humble opinion, Xero is the best. FreeAgent is a close runner. I'm not a QuickBooks fan. People who know me know I'm not a QuickBooks fan, but plenty of people do get on with it, okay? And like I say, there's loads of other ones. And you're going to have to send quarterly updates to HMRC. So instead of a once a year tax return, you're going to be filing numbers to HMRC quarterly based on your income and expenses for those periods. It's important to remember that those submissions that you make on a quarterly basis are not fully adjusted in the way that your year-end tax return and accounts would be. So if your accountant takes care of all this, you might not know about it, but there's a lot of adjustments that go on at the year end for things like depreciation, which is the deterioration of assets in value over time. There will be things like dividends that go on your tax return. They're not going to go into your MTD submissions. The things in your MTD submissions are pretty much your income and expenses from those sources. And then after you've done your 4 quarterly updates through HMRC, you have to do a final annual summary, which is called an EOPS. It's an end of period statement. And what that is going to do is adjust any ups and downs throughout the year. Now, what this is probably going to trigger is people putting any old figures in for 4 quarters and then adjusting it all on the year end, which is fine. But I imagine this is red flag time for HMRC. I imagine, in much the same way they do with tax returns, their software is going to have flags and boundaries in place. And if the adjustments are ridiculously big or ridiculously small, that's going to trigger something somewhere. Now, none of that is factual. Don't take me for that, because I don't know that to be the case, but it would be what I imagine. So no, they're not going to have to be spot on, because you're never going to know those numbers spot on at the end of every quarter without doing a full set of accounts. However, it's important to get those quarterly updates as accurate as possible. Now, what's also going to happen, which scares the life out of me, is this is a two-way system, okay? So through the software, you will submit to HMRC and HMRC can push stuff back to you. What HMRC are going to push you back to you is an estimate of what your tax is going to be. The reason it scares the life out of me is because it's not going to be correct. So without all of those year-end adjustments that we do, without the inclusion of things like your dividends, these tax figures are going to be completely wrong. And what that means is you're going to be looking at a figure that you're going to start thinking that's what your tax is going to be for the year end, and it could be completely wrong. So I don't know how that is going to pan out. I don't know what that means for us as advisors or for you as our clients, but I do know that we've got a two-way system. and you're going to receive a quarterly update to your estimated tax liability, but it's going to be wrong. So it's a bit rubbish. But at the moment, you're not going to have to make those payments quarterly. You're just going to have to make the submissions quarterly. And then you're going to do your usual end of year return. And that's when your tax is going to be due 31st of January, same as it's always been. So that's not going to change that yet. Emphasis on the word yet, because we can all imagine where it's going, but we don't know for sure yet. We're still in early days. I mean, they've just got to make this bit work first, and then we'll see what happens. Okay, so the most common mistakes when something like this gets implemented is leaving it too late. Now, I know it's not your priority. I know that you're running businesses and you're very, very busy, but you can't leave this and wing it in April 2026 when you've got to do it. It's just not going to work. There's just a lot to change. And the sooner you can embrace that and start making those changes, the better. We've already got some clients on the pilot of MTD. If anybody's interested in joining the pilot of MTD, you can do it now. There are obviously, if you got it completely wrong, there wouldn't be any penalties or comeuppance or anything. It's just a case of practicing to make sure that we get it right by the time April comes. But every accountant and tax advisor is going to be crazy busy implementing this in April 2026. And if you leave it till the last minute to approach them, it's likely they're not going to be able to help you in time. We already see this in January when people leave their tax returns till the last minute and it becomes very busy. And a lot of accountants won't even do tax returns in January. We're not one of them, by the way. A lot of accountants will charge you a premium if you bring your books and records to them after November. We're also not one of them, if a plug. But I'm just saying, if you don't get there soon enough, then your options are going to be limited. It's likely going to cost you more time, and it's definitely going to be more of a pain in the bum. Another mistake, clinging to spreadsheets. So I've mentioned this several times. I don't mean to sound like the person that says, look, you just need to get over it and move on. But it's kind of how it is, because you're going to make it harder for yourself. We will be offering various ways of doing this and various ways of accommodating what you already do. But clinging to spreadsheets is not going to help you for the long term. It feels safe, but it's actually going to be harder for you than just embracing the software that does it for you. Choosing the wrong software. So some of the tools out there are going to be really clunky, or they're not going to be MTD compliant. Like I say, you should be able to check whether it's MTD compliant. Going for the cheapest option or the free option is unlikely to be the best path to take. As we all know in business, quite often, if you go for the absolute bottom cheapest freebie of something, it is likely not to be the best one that you're going to get. And there's a reason for that, because that business is not making any money to be able to put the resources in to be able to make it good. So don't choose the wrong software. Have a look at what's available. Download the free trials, play about with their screens. You can download a free trial of almost every software package there is, or register for a free trial. I don't download these days, do you? I'm showing my age there. Register for a free trial, go on there, press some buttons, play around. Doesn't matter if you mess it all up, because you're only on a trial. You can close it all down and start again afterwards. But go and have a look and see what's there and see what works for you, because ultimately you want to be working with the software that you're most comfortable with. And finally, biggest common mistake, that's why it's at the bottom of my beautiful pyramid, is thinking it'll be easy without practice. It's just not going to happen. There is no way for me to tell you this, but Making Tax Digital is going to add admin into your life. We don't have a choice. It's coming. We've got to do it. So let's not think it's going to be easy. It's not. It's going to be different. But embrace the change. Okay? Okay, so what software can help? So just briefly again, going over what I would consider to be the 3 market leaders. You might put Sage in there, but that's if you don't absolutely despise Sage like I do. So I've just left it right out. So Xero, absolute top fave, in my opinion, the best software there is on the market, and many other people's opinions as well. I think if you speak to a lot of accountants, most of them will favour Xero because it does its job and it does it really well. That said, it is probably the most expensive. I don't know for sure, that's not a fact, but I would imagine it's the most expensive. There's a reason for that. It's because it's the best, okay? Then you've got Free Agent. So Free Agent is very much more aimed at small businesses. So I would say that if you're starting out or in your small and early days and you have these huge ambitions for growth, big dreams, I'm going to build a business, not just be a sole trader. Free Agent is very much aimed at small businesses and sole traders, and they themselves will tell you that it can't accommodate big businesses, and therefore at some point you're going to have to change. Whereas if you're a sole trader and you plan to stay like that and you're happy where you are, then Free Agent is a really, really great bit of software for that. It's really easy to use, and in addition to that, if you have a NatWest, Royal Bank of Scotland, or Metal business account, you get a subscription to Free Agent completely free. So it's definitely worth considering, especially if you bank with those banks. But bear in mind that if you've got big aspirations for running a business rather than just being a sole trader, it probably won't accommodate you for the long-term growth. And then QuickBooks, again, it pains me to say it, but QuickBooks is also a choice. So we do have clients on QuickBooks, clients on Free Agent. The majority of our clients are on Xero. QuickBooks gets used a lot. Their marketing campaign was very much, if you have QuickBooks, you can do everything yourself, which encouraged a lot of growth for them from startups and small sole traders. But a lot of those people will now come to us realizing it's not as easy as just putting the figures in there. And I think QuickBooks is more complicated than those other two that I've mentioned above, so Xero and Free Agent. Again, let me have your opinions in the chat. We'll talk about it afterwards. If you are a QuickBooks mega fan or even a Sage mega fan, then I apologize for my, what would it be called if you were like racist against different types of software? That's what I am. Okay, so what are your options and next steps? So when this happens, you've got a few options of how you're going to approach this. You've got the completely DIY approach, okay, which is absolutely doable in much the same way that people do their own VAT returns. So you do the records and the submissions using software yourself. This software is made for you to be able to do it yourself. That's not to say it's easy. That's not to say it's the wisest choice, because you're going to be using your time, which ultimately has a value, doing your bookkeeping and MTD submissions when you could be using somebody else to do that. I myself, what I always do is look at how much time something is going to cost me, what my time is worth to me, whether that is in time spent doing other things or time spent generating income for your own business, which we all know is the most important job. And if your time can be better spent, then you need to consider whether doing it yourself is the most valuable option, even though it feels like you're saving money because you're not having to pay someone. In the middle there, we've got the hybrid approach. So that is where you do some parts and get help for the rest. So I know that our offering that we're currently planning and structuring is going to be the DIY approach. And then there's going to be the hybrid option, which is going to be that you put all of the data into the software. So you upload your receipts, you put your sales invoices or create your sales invoices in the software, and then we deal with it from there onwards. So we deal with all the reconciliation, with making sure it's correct, with chasing up if things are missing, etc. So you've got a hybrid approach where you do a bit of it and then you use an expert to do the other half of it. Or you've got down the bottom there, done for you, where you outsource absolutely everything to a professional, which obviously I'm an accountant, I would highly recommend. But ultimately what that does is leaves that time available to you to be able to run your business, generate income for your business, deal with your clients, look after your clients, make everything better, doing the things that you're best at. So in much the same way that I could probably create my own presentation slides, it will take me absolutely ages, and I'm rubbish at design. So I outsource it, because the thing that I'm really good at actually is what I'm doing now, and communicating with clients, and getting information out there, presenting information. So I that's my area of specialism, and that's where I am going to be the most use, and therefore I'll get someone else to do the slides. Side note, I actually used an app to do the slides. It's an AI one, and I think it's pretty good. It made them in, like, I told it everything that I wanted to be on there, and then it made them in like 5 minutes. Then I had to play about at the end. That's a side note. I'm going on a tangent. Who can blame me? Tax is boring, right? Okay, and next steps, start now. Okay, pick your software, start doing it digitally now, because right now you haven't got to get it right. You've just got to try and start. So that when you come to the time when you're having to make those submissions, you're not in absolute chaos. You're not throwing bits of paper about all over the place, wondering what on earth you're going to do. You're not put yourself under this massive stress, because you're already comfortable with what you're doing. So start now. Have a look at the software. Pick which one you like. Speak to an advisor. Talk to people that can help you. Ask me for a chat. I'm happy to give you one. Track stuff digitally and start budgeting for quarterly taxes. Now, no, you're not going to have to make those payments yet. We imagine that eventually you're going to have to make quarterly payments. We advise all of our clients that we budget for taxes on a regular basis anyway, because the worst thing about tax is when you get an unexpected tax bill. Everyone hates an unexpected tax bill. When you were employed, if you were employed, you lived your life based on the money that's hit your bank account. You might have grumbled about the tax that was going to be taken off of it. You might have looked at your pay slip and resented the tax man, but ultimately you lived to your means. And at that time, your means were the net amount of money that was going into your bank. What happens when you're self-employed or running a business is the gross amount goes into your bank, and then at some point you've got to part with it again. It's painful. Psychologically, it hurts. Psychologically, you make the wrong decisions because you think a certain amount of money is in your bank and therefore it's yours, whether you know it or not. So we always encourage people to budget for taxes more regularly. This is going to allow you to do that. And finally, how long has it taken me? Half an hour. Oh, that's about right, isn't it? And finally, a little bit about me, because no webinar is complete without the webinar host telling you all about themselves. So I am Michelle Morris, and I am the Accounticorn, which is an accountant but far more awesome. And for over 25 years, yes, my entire working life, I've helped business owners and freelancers understand their finances without the jargon, judgment, or stress. So the reason I started my own business was because I didn't fit in. Okay, I'm not into this. Let's talk down to everyone because they don't know what I know about tax. I'm about trying to communicate it to you. I'm not professing to be any expert more than anyone else. I just probably know more than my clients about these things because of the fact that I've done it for 25 years and qualified in it. And therefore, I just want to help people. Accounticorn is my personal brand, and it's online. It's an online hub, and through that I'm doing digital courses, I'm doing training sessions, and I'm doing one-to-one support for both clients and other accountants and bookkeepers So I've got a couple of my mentees on the call today. I basically help other bookkeepers and accountants in their journey to growth. Having run Ellicott Morris, which we'll move on to, having run Ellicott Morris for, it'll be 14 years in December, there's not a lot that I haven't experienced in my journey as a business owner. And so my aim is to share that. Nothing that I'm professing to be the best at, just a lot of experience and a lot of knowledge. And Ellicott Morris is my award-winning accounting firm. So we've won multiple awards, and we provide accounts, tax returns, financial planning for growing businesses, as you'd expect. But we do it with a team of 12 people who are all absolutely wonderful, perfectly aligned with our company culture. And we are there to help our clients. We're not there to work for HMRC. We are the middleman, yes, but we're there to help the client, not to help HMRC. Yes, we work with HMRC, but we're in the middle and we're there to help you. We're there to help you to grow your business, to flourish, and to understand what on earth you're doing when it comes to accounts and tax returns. And I specialise in making tax rules easy to understand, helping you stay compliant while preserving your time and creating simple systems that streamline your business. So historically, what I've found and what a lot of clients will come to us saying is that their accountant has done this, that and the other, but they don't really know what they've done. And probably not so much in this day and age, but certainly when I first came into the profession, there seemed to be this thing where we don't actually tell the clients everything that we're doing. It's like we're keeping it a secret to justify our fees. And I just don't believe in that. I believe in explaining everything that I possibly can to you. I believe in making it as simple as it naturally is. Like, it's really not rocket science. It's just that I know more because I've been doing it for such a long time. I'm not the brightest person in the room. I just know what I'm doing with this. And as Making Tax Digital approaches, I will help you prepare confidently with resources, training and services tailored to your needs and your budget. So I'm going to be doing lots of webinars. I'm going to be doing in-person seminars, and I'm hoping to do some pop-up clinics within my area. So I'm in Tendring in Essex, and I am planning to do pop-up clinics that people can drop into, just get some help and some advice and everything else. That picture of me is me with my little unicorn karaoke machine, which one of my team bought for me for my birthday, because I love, love, love singing karaoke. I call it singing because I am absolutely tone deaf and I cannot sing for the life of me. However, God loves a try, right? And it's got a little unicorn on it. So I just thought that was nice for a shot. And that should be, yes, the end of my slides. So what I'm going to do now is hopefully stop the screen share. Oh, no, that's not it. Stop share. Just press the button, Michelle. It's easy. And then I am going to have a look through the questions. What are some, so Shireen, what are some examples of bridging software? I don't particularly know. I know that for VAT, all of the main providers do bridging software, so you can get zero bridging software. And then there are lots of smaller businesses, smaller software developers that are producing a solution for bridging software. But yeah, I'm not an expert in bridging software because I've used it a couple of times for clients when we were doing it for that. And when I don't like something, I don't do it. Is earning classed as turnover or income? Okay, so it's your sales, your total sales. So it's whatever you're generating in sales income for your self-employment, or if it's rental income, then it's the amount of income that your tenants are paying you. It's not the amount of profit that you make at the bottom after you've taken all of your expenses off. So you need to be looking at your total income. Earnings from trading only, or is total income included? So it will be earnings only from sales made through your sole trade or self-employment, as well as rental income, but not any other earnings. So if you've got employment income, this is not included. If you've got dividend income, not included. Bank interest, not included. Okay, so it's just from your self-employment and or rental income. Helen, if sole trader income is 30k and property rental 30k, do you have to do it, or is it only when one exceeds 30k? Do you know, I'm not 100% sure on the answer, but I would imagine it's the combined total. So I very much doubt you can have 29k of each and then be under the 30k threshold. I think it will be the combined total of your sole trade income and your rental income. Laughing face from Sam and Helen. So Sam and Helen are both bookkeepers and accountants, and they are joining in the zero. Well, Helen said she's definitely a zero fan. Sam, you've just put a massive laughy face. Does that mean are you team zero, or do we have an enemy in the midst? Vanessa, I'm a childminder and the government pay me, so I don't give out invoices, but I'm still self-employed. So does it matter if I can't provide invoices? Okay, so the main requirement is that you're recording it digitally. So you don't have to provide an invoice unless you're VAT registered. That's another game, another set of rules, okay? But you just have to record it digitally. So that money that comes into your bank account, you could just be coding it in the software to sales. You don't have to produce an invoice for it to be classed as being digitally recorded. Sam, I'm a free agent girl. Okay, good. I'm pro free agent. Okay, so that is everything that's in the chat box. Would anybody like to unmute and either ask questions, have a chat, or give me some feedback? You would be very welcome to do so. Come on, somebody say something.
So this is the first time I've really looked at making tax digital. I know we've had a bit of a chat about it. So this is just trying to find out what it actually means and what it's about. So it's given me that very first understanding of it, because I've not looked at it at all. I knew something was coming, and I have got free agent because I've got metal. Not that I use it. I got it purely for the purpose of getting the free agent. But so I guess it's for me, it's just going to be, and I'm glad what was her name? Vanessa asked the question about the invoices, because my clients don't get invoices. They just pay me direct into my account. So yeah, just going to go and have a play with the software and see how that goes.
Brilliant. Yeah, I think that's the way forward is, even if you've got free agent there, even though you don't use it, just start using it for one thing, just start, perhaps connect your bank feed. So with this digital software, you can connect your bank feed so that all the transactions from your bank come into the software.
You see, I think it already does that. Not that I've looked at it, because that was
Okay.
the original reason for setting it up.
Yeah.
But yeah, I've
So
probably
just
got about 3,000 transactions to go and that, I suppose that's a question that I don't know whether you can answer this. So can I clear anything prior to this current tax year so that I start with a fresh sheet?
Yeah, you can. Yeah, you can change the start date in free agent, and then it'll clear everything historical so that you're starting with a clean sheet.
Perfect. That yeah, feels a bit easier.
Yeah, rather than going through all of that historical. If not, I mean, there will be pretty quick ways of getting through that historical by bulk coding them. If you want any help, then obviously just let me know.
Thank you. No,
All
thank you.
right. I'm glad it was useful though. Thank you.
Thank you.
Can you, Sam, can you do this in the dreaded QuickBooks? Yeah, you might have to put a journal in, Sam. So I think if you change the date in QuickBooks, you can change the date, like your conversion date effectively. What you might then have to do is have a look at the trial balance in the reports and do a journal to clear it all down. If you need any help, obviously you know where I am, you have my direct contact. So yeah, if you need help with it, then just let me know. But it will be very straightforward to be able to do it. You just need to change the date and then journal it all out and clear it all straight down. So yeah, it will be possible, but it might be slightly different how you do it in different software. Anyone else? Any other questions? No? Okay. So on that note, I will leave it there. Like I say, I will be putting loads of stuff out, social media, webinars, in-person real life seminars and pop-up clinics, hopefully. So if you need anything, just drop me a message anytime. I'm always available. And thank you so, so much for attending. When you do these things, it's really scary that no one's going to come. So thank you very much for attending. And good luck on your journey to making tax digital. Goodbye.